Spotify technology is currently trading with a market cap of around $50 billion US, down from its 52-week high of $387.44, but up from its 52-week low of $211.10, currently trading at a per-share price of $262.83. Over the past year, the stock has traded relatively flat, up a measly 0.63%. Compare that to benchmarks such as the S&P 500, and you'll see that it significantly underperformed those benchmarks. It has no dividend yield as well. Here's why I sold my Spotify stock in a rather controversial manner, and that is because I was previously extremely bullish on this company. I was a very proud shareholder of Spotify, but since then I have sold all my shares of Spotify and move them to other investments. I'm going to talk about in this video why I sold my Spotify stock, but for now, this is the SPOT, that is the ticker symbol for Spotify stock analysis. I'm your host, David Scheuer. This is StockerFinance, twitter.com/StockerFinance for more information. The newsletter link will be below. It's a once per month newsletter. I enjoy doing it, not trying to sell you anything. Just go ahead and subscribe. It's only once per month. Let's start out with some of the positive notes, and let's do a pretty, just a little overview of this company's fundamentals. For the charting software I'm using, it is Hypercharts.co. Great company. Definitely check them out. Hypercharts.co is the charts that I'm using for this. Definitely check them out. So, monthly active users. Currently has a total monthly active user base, which is steadily grown over the past the past years. I mean, just really steady growth. One of the positive signs for this company is they continue to expand into a global market, but monthly active users total at 356 million monthly active users, with premium subs at just 158 million, so about half of its total monthly active users. Revenue segments really just, kind of display the issue going on, which I'm going to talk about in a little bit here, or more towards the end of the video, which is that its premium subs dominate its revenue, despite premium subs being less than half of its total monthly active users. Premium subs bring in 1.931 billion euros, with ad-supported bringing in 216 million, with a total revenue of 2.147 billion. Operating expenses here declined from Q4 2020 down to the most recent quarter, Q1 2021, of 534 million total operating expenses. Majority of that is being dominated in sales and marketing at 236 million, and R&D, research and development, at 196 million, with a little bit in general administrative expenses of 102 million. General administrative expenses haven't cut back slightly from the previous quarter as well, but general and administrative sales and marketing expenses have remained about the same. Same with R&D expenses. In terms of a percentage of overall operating expenses, at least. If we look at growth here, a positive note over the past quarter, so operating expenses are growing, revenue is growing at a faster rate than operating expenses. So operating expenses year over year grew 9.2% on the last quarter. Revenue growth year over year 16.18%. But as you can see over the past few quarters, this growth has not been the same. With Q3 and Q2 operating expenses growing significantly faster there. Same with Q4, where it really spiked up. And a lot of this has to do with the licensing deals, just the major expenses that Spotify has been undertaking to acquire new content for and just try to attract users with its new podcasting, initiative, such as, I'm going to talk about this a little more, so I don't want to go over it in too much detail, but stick around in this video and we're going to cover over its operating expenses, especially in regards to its acquisitions and licensing deals, where it has spent major money on podcasts such as the Joe Rogan podcast, the Call Her Daddy podcast. There's also the Michelle Obama podcast, which has yet to air, on top of the Gimlet Media as well. And I'm going to talk about the positive and negatives of those. But for now, let's look at operating income at a measly 14 million over the last quarter, Q1 2021. Gross profit continues to be pretty steady and steadily growth here over the past few quarters of 548 million, with net income positive the last quarter of 23 million. A major issue with Spotify, especially as an investor, is that there's been no clear sign of sustained profitability for this company. Just look at its net income over the past couple years. It's been extremely volatile, with some quarters having major profitability and some quarters having major losses. So that is a major issue for this company, especially in the short term or the medium term. There's no clear path to profitability. Even as a very, very long-term investor, let's say 5 years from now, I still don't see sustained profitability within that time frame, at least in a clear view. The CEO might think that, this is going to happen, but as an investor, I want a clear plan for how that's going to happen, and I just don't see that happening right now. So if we go ahead and look at its margins, profit margins at 1%, and its gross margin at 25.52%. But now let's dive into the three main reasons for why I sold my Spotify stock and why I'm no longer a shareholder of this company. company. The first reason is that it's not capitalizing on its user base enough. That is one of the largest points for me. The second largest point is that it has an inability to create a sense of community. And this is especially important for creating an excellent podcasting network for users to continue to come back and use the app and stay on the app as well, which means they're going to listen to more ads, which means it'll drive more revenue for Spotify, or it means that they'll be more likely to become paying subscribers for Spotify, which will give them that monthly recurring revenue. Now, this may not seem like the largest reason for selling Spotify stock, but to me, this has been a major issue, showing Spotify's inability, especially on its leadership level, its inability to adapt to the podcasting network and to understand who its users are and what they need. And if you don't understand what your customers need, if you don't understand what the customers want or why they aren't, doing what you think they would have done, such as, listening way more podcasts on Spotify than, let's say, listening to audio on YouTube or Apple Podcasts, that's a huge issue. And I just think they're not understanding why YouTube is the #1 audio platform right now compared to Spotify or these other companies. It's because YouTube creates a sense of community. But anyways, I don't want to dive into that too much yet. Let's talk about number 3, which is that it's not diversifying revenue streams through its platform. And this kind of is a mix of number 1 as well, kind of goes back. Some bonus reasons are competition, overspending, and the timeline for expected return. I've received a nice return on my Spotify investment, but I just didn't see that return growing any further in the near future to the amount that I would like, which is, at least beating the major benchmarks, such as the S&P 500. So let's talk about Spotify not capitalizing enough on its user base. Let's look at its monthly active users compared to premium subs. Monthly active users total at 356 million compared to premium subs of 158 million. But if we look at the revenue segments, as I stated previously, revenue segments for premium subs are 1.931 billion, almost all of its revenue, with ad supported at just 216 million. So why is almost all of Spotify's revenue coming from the smaller portion of its monthly active users? Spotify needs to capitalize significantly more on its total monthly active user base rather than just its premium subs. This is hurting them significantly. People have so many different subscriptions. People are kind of getting sick of subscribing to new services. I mean, you have so many bills every single month. People don't want to subscribe to a new service. A lot of people would just rather listen to a few ads or rather just have some service that offers them free audio, such as going to YouTube, completely free. You can look up any song on YouTube and you can just listen to it there. And yes, there's going to be an ad, but you can skip it after a couple seconds if you want, and you get to listen to your song. So yeah, obviously YouTube has YouTube Red and such, but YouTube has so many users and it has so much in terms of an audio platform. You wouldn't expect this, but YouTube actually dominates some of the other players because there's so many people watching and listening to the content on there. And that brings me to the number 2 segment as well, which is its inability to create a sense of community. And this is especially important for podcasts. Let's take the Joe Rogan podcast, for example. And I think this is one of the most prime examples of Spotify's failure to create a sense of community. When Joe Rogan went to Spotify, when it left YouTube, I felt like the whole Joe Rogan crowd kind of got dispersed almost. Like it was this tight community and people were, when I would listen to the Joe Rogan Experience, and I'm a proud listener of it, I think a lot of his podcasts are very well done. I think it's really interesting to hear two people or just a bunch of random people just having normal conversation, especially individuals like Elon Musk, who are just, they almost seem kind of otherworldly in a sense, which who knows, Elon probably is an alien for all we know. But just hearing him have a normal conversation with someone is really cool. And I think it's really important for making them, I guess, more human anyway. That seemed like what they've accomplished is actually attainable for all of us, I guess, quote unquote, normal people. So anyways, the Joe Rogan Experience is a very interesting podcast, but it had this really tight-knit community. And one of my favorite things about it was scrolling down to the comment section and reading people's commentary about specific parts of the podcast while listening at the same time. It was so cool to read some of those comments, and they were just hilarious as well. I mean, some of the funniest things I've ever read are on there. Just jokes, just memes, people just cracking everything. I mean, it was so funny down there in the comment section. As you know, on YouTube videos, when something funny happens in it, or when it's a controversial video, or whatever the video may be, most people will scroll down to the comment section to people see what others have to say about it, whether it's something funny, whether they have different opinions on it, whether they can add more information or more context to the video, whether they can fix an error mixed in the video, or if someone misspoke in the video. People in the comment section will always catch that. Spotify fails to have this entire sense of community, and that is a huge downside to using this platform. And it's just a huge, I think, issue for Spotify for really keeping users on the platform, especially, their claims that Joe Rogan has way more listeners now, maybe just because there's so many people listening from around the world compared to whereas previously, just in the United States for Joe Rogan or something. I'm not really sure exactly what their claim is there, but in my opinion, it feels like the Joe Rogan podcast has really lost a lot of its leverage and a lot of its dominance in the podcasting space. And if we go ahead and look at some other issues too with full screen here, you have the full screen is kind of clunky in my opinion. It just the video player is kind of clunky. It's improved significantly from when they first released it. You can kind of move it around on the screen in this weird way. On the phone, I think it's actually better than on the laptop, which is interesting. But they definitely need to fix some clunkiness about it. It's not the worst thing in the world, but it definitely needs to be slightly fixed. There's some things with, being able to just scroll down while you're watching the video. On a YouTube video, if you're in full screen, you can still just scroll down on your laptop and look at the comments and then scroll back up to the full screen version. On this, you can't do that. There's some other little things as well that just kind of bother me, but it's not the biggest deal. I just think they need to fix that as well. And on top of that, there's just some other problems. There's no comment section. Again, I just want to re-emphasize this. The comment section is one of the biggest problems because it creates a sense of community, which not only keeps people on the site, which means they're going to listen to more ads, which will drive revenue, especially from the non-premium subs, which Spotify needs to capitalize on, as I'm going to reiterate there. On top of that, the search engine functions are slightly difficult on Spotify. They're not the worst, I'll be honest, but I don't know. I guess YouTube's search functions are so well done that comparing it to Spotify just seems so much better. Apple Podcasts has a problem with this as well, in all honesty, same with a lot of other podcasting platforms. But if you have noticed, Google has actually implemented audio and implemented a podcasting service. Now, if you look up a certain podcast on Google, it'll come up and you can just play it right from the Google search engine. And so that makes it really easy to search podcasts, but the Spotify definitely needs to improve on that as well. And I know this doesn't really have to do with the sense of community issue, but just more has to do with the platform overall. I think they could use some improvement on it, especially with the comment section and creating that sense of community in order to allow them to capitalize. Now let's talk about diversing revenue streams through its platform. This is really where everything comes together, especially the last 3 points. Let's look at the current revenue streams to what I think could be potential revenue streams. And I included the current revenue streams in potential revenue streams, by the way, just to show how many revenue streams they could have in total compared to what they have now. So the current revenue streams include paid monthly subscribers, ad revenue from non-subscribers, which we've looked at, and some music deals, and then some random other things as well, such as revenue from investments or something like that. And then let's look at potential revenue streams. So we have, again, paid monthly subscribers. That'll always be a thing for Spotify. Ad revenue from non-subscribers. I think that will always be a thing. Some music deals, that could definitely be increased. On top of that, why isn't there not merch stores for artists and podcasts? That seems really easy to integrate. This is something I've been saying Netflix should have as well, which they've started to sort of do a little bit, but not really. I think if you could just have a whole profile for an artist where you can not just see one photo on there, but have a whole catalog of merch you can purchase and all this stuff. And every time someone buys something through Spotify, it'd be really easy for them to take a small fee. They could completely partner with a bunch of distributors and stuff, making it really easy and seamless to integrate into their service. Exclusive paid content. OnlyFans, and I don't want to compare OnlyFans to Spotify. OnlyFans is exclusive paid content, and it is one of the biggest platforms. I mean, it's insane how much revenue they do if you've looked into some of the stats there. Now, I'm not saying Spotify is anything like OnlyFans at all, but I'm saying that the potential revenue streams for Spotify when it comes to exclusive paid content, such as podcasts who have, let's say you have a really important person on, but you have to say, okay, you have to pay $5 in order to listen to this, that not only drives more revenue for the artists and for the creators on Spotify, but it will also drive more revenue for Spotify itself. And it will also capitalize way more on ad revenue from non-subscribers. On top of that, concert/event tickets, they do a little bit of this. I think they should capitalize more on this significantly, though. I think they could become their own ticket master in a way and just integrate it into their service with all the artists buying tickets directly through Spotify. That makes complete sense for them. Being a music label might be a little difficult for them to take on, especially against, since like UMG, Universal Music Group, some of those big behemoths will be tough to take on. But they have such a massive user base, listener base, and they have so many artists on there. And so many artists use Spotify as some of their main way to grow. I think, and we've seen that Spotify is now leveraging these massive music groups and these massive music labels who have realized Spotify's massive advantage and leverage in the music space. So I don't see why they become more of a music label and capitalize on that. Perhaps they could do a merger or purchase a small music label rather than building a brand new one. Now they could already have the bones and the fundamentals of a music label and just kind of integrate it into their company and into their service. This means for artists, they'd make way more money from them. It would help artists as well. At least I hope it would. On top of that, video ads. Right now, when you listen to podcasts, they just have kind of a blank screen with an ad that you can just easily scroll through. And I don't see how that's very effective for the advertiser at all. And if it's unskippable, that can kind of piss a lot of people off as well. But I think the YouTube version of ads, of having it, hey, you have to listen to it for a couple seconds. If you like it, you can keep listening to the ad, which sometimes I do. If I think an ad is really interesting, I'll just keep watching it if it's an interesting video. But at least Spotify will have more effective advertising, and it'll capitalize more on its video platform as well. Donations, this seems like a no-brainer. You should be able to donate to artists. I mean, if you love an artist, there's plenty of artists, especially small ones, that I just love one of their songs. I would totally give them a couple bucks. Back in the day, you'd sell CDs, or you'd sell, vinyl records, or whatever it might be, or tapes. And that was the way that you would make money for being an artist. Even as a small artist, you could at least go stand on the corner and sell some of your CDs or your label or whatever it might be. But now you don't really have to do that. You just upload and maybe you'll get a little bit of advertising revenue, but it's so tiny. I mean, it's like 0.01 cent per listen or something like that. So it's not really worth the time for a lot of our smaller artists when they have to go work another job in order to do it at the same time. But if you could have donations similar to just like Twitch or live streams where creators are creating this content, or YouTube as well, at least you could donate and Spotify could take a small percentage of that donation. Live stream audio, I think Spotify could definitely integrate more of that. That'll increase donations. It'll also increase you could integrate a ton of stuff into that. I'm not even going to dive into that because it'll go in so many directions. Paid live concerts, I think this would be really cool as well. Just an idea. And a bunch of other things as well. I'm sure you guys could help brainstorm a million different revenue streams. But my point is, Spotify is not capitalizing on its revenue streams. Now let's talk about some of the other reasons here. Overspending, and especially with its licensing deals or acquisitions of these other podcasts. So Gimlet Media, they purchased for $230 million. I think Gimlet Media was one of the better purchases they made. Although it was one of the most expensive, Gimlet Media at least will be around for a long time, and they can keep producing content. And not just any content, different content. They produce tons of different podcasts with millions of listeners. I mean, they can do so much with that company. I think that wasn't the worst deal in their opinion. Color Daddy. This was one of the worst spending things I think they made. Number one, I think they paid way too much. Number two, the podcast has a massive following, no doubt about that. But they're purchasing this podcast at arguably the peak, not when it's starting to grow. If Spotify was strategic and smart, they'd purchase podcasts when they're kind of on the come up. The same with Joe Rogan. Joe Rogan has been, at its peak, in its prime, and they purchased it then rather than when it was on its come up. And they purchased it for around $100 million or more, a ridiculous amount of money for that podcast. Now, you could argue that might be worth it for Spotify for attracting so many users. And I will say in previous videos, I argued and justified it for Spotify. I still think it was an insane amount of money to spend for a podcast in its prime. And that's the key thing here. Purchasing podcasts when they're growing and at their height of their growth, rather than at their prime when they're most likely going to start decreasing in their growth. The Michelle Obama podcast we purchased for an unknown amount of money. I'm guessing it was a lot. And it hasn't even aired yet. I mean, this announcement was so long ago. I think it was like a year or so ago, at least. And they haven't even aired yet. So that's a little ridiculous to me. Same with the Kim Kardashian one. Around $700 million or more in acquisition costs just in the past 1.5 years. This is an unprofitable company. This is just a little ridiculous to me. I want to see sustained profitability as an investor. I want to get a return on my investment and be able to receive a small dividend or something like that. Or if not a dividend, I want to see this company being able to reinvest all its profits back into the company, or at least show that it is having some sort of sustainable net income that can continue to grow. So I know that this company has the ability to be profitable, because otherwise it's extremely concerning to me. And if we look at operating expenses here as well, sales and marketing takes up $236 million. I think sales and marketing is important, but I think they could not dollars, but I think they could definitely cut back on that. G&A is, general administrative. I think that's fine. R&D, again, if they're spending $196 million, per quarter on R&D, why aren't they? Where is this coming from? I mean, where is this going? I don't see Spotify's platform, besides their small video platform, which is new, innovating at all for that much money. I mean, they're spending, around 500, 600 million a year on R&D, and I've seen very little development. Maybe they're doing a lot of research, but I haven't seen any development on the platform. There's so many different revenue streams. There's so many different things they could do with their massive customer base, and they could especially capitalize on that massive customer base, as I've stated previously. I don't see them doing that. I think it's ridiculous, and I think their R&D definitely needs to change. Something about that. They're doing a lot of research, and I don't see any development happening besides the kind of clunky video platform. And the timeline for expected return. This is a huge issue. As someone who expects at least to beat the S&P 500 benchmark, I have not received that return over the past year. And as an investor, that is a problem for me, because not only is Spotify, was it having a great return year over year, but now the stock has remained relatively flat. And a lot of people could say this isn't an issue with Spotify, if the stock increases a ridiculous amount, you have to have a long-term mindset. I agree, but I still want a yearly return on my investment. And especially, and this is the big point, especially when I know that there's other companies I could invest in and receive a better return than this company right now. So that's what I did. And it turned out my theory was correct. Spotify only returned 0.63% over the past year. And I don't see the stock going anywhere tremendous unless they continue to innovate. If they start innovating, if they make big changes, then I'll definitely take a look at Spotify and reevaluate, my position on the company and whether I should become an investor again. But for now, sorry Spotify, but I'm out. Again, the S&P 500 over the past year is up 38.49% compared to Spotify 0.63% without innovating or without any signs of sustained profitability. Anyways, guys, I'm going to stop rambling here. Thanks for watching. Please subscribe. Let me know your opinion on this company and your take on Spotify, as well as going not in just the short term or the medium term, but into the long term as well. What you think about this company, comment below. Twitter.com/StockerFinance for more information. Check out these videos as well. The newsletter link will be in the description below or on the